In this video I will talk about risk management in day trading, how not to lose all your money. Welcome to my channel. My name is Yannis and my job is to grow your wealth. In the last video regarding day trading, I showed you what could go wrong if you go all in on one trade. Let's have a short look. This stock's looking good. No, I will not buy it. No. I won't buy it. No. What the heck. If you want to see the rest of the video, you can check it out right here. If you are into day trading, I bet you experienced a trade that did not go quite well. In fact, the opposite of it. You watch a stock chart and say to yourself, wow, the stock rose 5% today, but now it's too high. I won't get in. 10 minutes later, wow, it rose another 1%. Now I have to go in. And of course, it happens what has to happen. It takes a massive hit 5 minutes later. Does this sound familiar? Well, I know that feeling. I've been there. I would not recommend you to invest in it if it already is that high in the first place. But we all know that sometimes the fear of missing out becomes more powerful than logical thinking, right? So you need something to prevent you from losing too much money in your trading account. In fact, having a good risk management is far more important than making huge gains here and there. Making 3% on Monday and 2% on Tuesday does not mean that lot when you lose 10% on Wednesday, right? I want to show you an easy to follow risk management plan today. First of all, before you continue with anything else, you have to find out your risk tolerance. So what are you willing to lose that does not hurt that much? Let's say you have $5,000 on your trading account. 1% of that would be $50. I personally think if you're just starting with day trading, losing $50 is too much, right? So let's start with 0.5%. That would be $25. This $25 would then be 1 R. So what does R stand for? It stands for one risk unit. So if you lose that $25 in one trade, you have lost 1 R. If you have 2 R per day, you stop trading for the day. That means if you lose $50 per day, you stop trading for that day. So that is for one day. But what is per week? If you lose 6 R per week, you stop for the week completely. Even if it's just Wednesday and you lost 6 R, you stop. For the month, you have 12 R. That means if you lose $300, you stop day trading for the complete month. I know, this sounds very drastical, but you have to follow that plan if you want to stick with day trading and don't lose that much money. The goal is to not blow up your account and stay motivated. You should at least follow this plan for 3 months straight and see if it fits you. Without a plan, you will blow up your account. Without any plan, it is like gambling. You don't want to be a gambler, do you? The reason many people think that day traders are actually gamblers is because most day traders are gamblers. It's true, there's no plan at all. They just hope for the best and this can't work. So please, don't be a gambler. If you like this video, please smash the like button. This really helps my channel and I appreciate the support. Thank you. Now let's continue with the video. The second thing you have to do to save your money is to set up your stop loss. So if you buy a position, always set your stop loss. The best way is to set it with your buy. I mostly use TradingView. Here I can set up my stop loss with the buy. Well, it depends what trading platform you use, but every good trading platform gives you the possibility to set a stop loss. If you cannot set it up with your buying order, make your limit sell order right after it. This approach has more risk than the previous one I mentioned, but if you don't have any other option, use this. But look out that you don't risk more than 0.5% of your account or less if you don't want to risk 1 hour on one trade. So, as an example, if you buy 10 stocks for $100 each and you invested $1,000 in total, you have to set up your stop loss at 2.5% or $25 to not lose more than 1 hour. If you don't want to risk 1 hour, you have to set it at 1.25% or $12.5. You get my point, right? So overall, make sure you always set up your stop loss. A lot of the traders invest their whole account on the first trade of the day because a lot of money makes a lot of money, right? Well, theoretically, yes, but if you want to manage your risk, this is a really stupid approach. So don't invest 100% of your account. Start with 25%. So if you have $5,000 in your account, start with $1,250. If you feel confident, you could pump it up to 50% and go with $2,500. Later on, you can go with 75% and invest $3,750. But for starters, begin with 25%. Of course, it is always a choice how much money you're willing to risk. I'm just making proposals here. So, like I said, stick with this plan for 3 months and see how it works for you. I really hope you could take something useful out of this video about risk management. If you have any questions or constructive criticism about the points I mentioned, let me know in the comments. Consider subscribing to be notified about any future video similar to this one. Thanks for sticking around. I hope to see you in the next video. Take care. Bye.